Understanding tax basics. What you need to know. Did you know that nearly 90% of taxpayers choose the standard deduction because it simplifies their tax filing process? But what if you're leaving money on the table by not exploring your options? Intro. Welcome to our channel, where we break down the essentials of understanding tax basics. We'll also cover filing deadlines, payment options, and some common pitfalls to avoid. Stay tuned because later in the video, we'll reveal a little-known tax strategy that could save you hundreds, if not thousands, of dollars. Main script. What exactly are taxes? Taxes are those unavoidable financial contributions that individuals and businesses must pay to governments. Think of them as the fuel that keeps the engine of society running smoothly. These funds are crucial for financing a variety of public services and goods, including infrastructure, healthcare, education, and public safety. Grasping the concept of taxes is essential for effective money management and long-term financial planning. With a solid understanding of how taxes operate, you can make informed decisions about your income, investments, and spending, ultimately leading to better financial health and stability. Now, let's look into the different types of taxes that you might encounter in your everyday life. Income taxes. First up, we have income taxes, which are probably the most recognized form of taxation. These taxes are applied to the earnings of individuals, covering everything from wages and salaries to tips, bonuses, dividends, and capital gains. If your income crosses a certain threshold, even your Social Security benefits could be subject to taxation. In short, if you earn money, you're likely going to face income tax. Payroll taxes. Next, we have payroll taxes. These are deducted directly from employees' paychecks by their employers' paychecks by their employers, ensuring that contributions to social programs are made seamlessly. The most significant of these is the Federal Insurance Contributions Act, FICA tax, which funds essential programs like Social Security and Medicare. Employers also take care of state and federal unemployment taxes as part of these payroll deductions. Sales taxes. Moving on, let's talk about sales taxes. These taxes come into play when you purchase goods or services and are typically paid by the consumer right at the point of sale. Sales taxes can be imposed at various levels: federal, state, and local, meaning that multiple taxes might apply to a single transaction, generally calculated as a percentage of the product price. It's worth noting that some online retailers may not charge sales tax when selling to customers in other states. Property taxes. Finally, we have property taxes. These are levied on the ownership of property, primarily real estate, and are usually collected at the local level, such as by cities or counties. Homeowners, as well as vehicle owners, may encounter these taxes, which play a vital role in funding local services like police and fire departments, road maintenance, and more. Understanding these various types of taxes can empower you to navigate your financial landscape with confidence and clarity. Understanding the tax filing process. If you work for an employer, you'll need to file a tax return based on the income you earn throughout the year. Employers play a key role in this process by providing you with a Form W-2, which outlines the wages earned and taxes withheld for the year. This form is essential when filling out your individual income tax return. Importantly, all forms of compensation, whether wages, tips, bonuses, or commissions, are subject to income tax, even if they don't appear on your W-2. For self-employed individuals, things work a bit differently. Instead of a W-2, self-employed individuals typically receive a Form 1099 NEC, which reports the income they've earned as independent contractors. This form is also used when filing tax returns. It's a common misconception among young people that they don't need to file a tax return if they haven't earned much income or are still supported by their parents. However, not filing a tax return could mean missing out on potential tax refunds. A tax refund happens when you've paid more in taxes than you owe, and the IRS returns the excess amount to you, something that could be especially beneficial for students or low-income earners. When people think about federal taxes, the first thing that usually comes to mind is the income tax. However, there's a whole range of other taxes that the government imposes, impacting both individuals and businesses in various ways. Capital gains tax is one such tax that is applied to the profits you make when selling assets like stocks or real estate. If you sell your house or some shares and make a profit, this tax will come into play. Then, there are Social Security and Medicare taxes, which are part of payroll taxes. These funds are crucial because they support essential programs that many rely on for retirement and healthcare. For those who are self-employed, there's the self-employment tax. This tax covers both Social Security and Medicare taxes and is something freelancers and business owners need to keep in mind. Excise taxes are another category applied to specific goods such as cigarettes, gasoline, and alcohol. These taxes can significantly affect the price you pay at the register. Lastly, we have gift and estate taxes, which are imposed on wealth transferred during a person's lifetime or after their death. These taxes ensure that the government collects a portion of wealth that changes hands. What is the IRS? The Internal Revenue Service, IRS, is the agency responsible for administering and enforcing these federal taxes. They ensure that taxpayers comply with the tax code and provide guidance through regulations and revenue rulings. If there's ever a disagreement about how these laws should be interpreted, taxpayers have the right to challenge the IRS's interpretation in court. Tax deductions are another important aspect of the tax system, allowing you to reduce your taxable income. By subtracting eligible expenses from your total income, you can significantly lower the amount of tax you owe. Deductions are taken from your adjusted gross income, AGI, which is your total income minus any qualifying adjustments like student loan interest or IRA contributions. After calculating your AGI, you can further reduce your taxable income by claiming either the standard deduction or itemized deductions. This can lead to substantial savings on your overall tax bill, making it a valuable tool for taxpayers. Standard deduction Vs, itemized deductions, standard deduction. This is a fixed deduction available to all taxpayers. In 2023, the standard deduction was $13,850 for individuals and $27,700 for married couples filing jointly. Many people, around 90%, choose this option because it often results in a larger deduction and is simpler, without the need to keep track of detailed expenses. As we transition from the straightforward approach of the standard deduction, let's explore another option that might be more beneficial for those with specific expenses. Itemized deductions. If you have significant deductible expenses, you can choose to itemize them. Common deductions include mortgage interest, state and local taxes, charitable donations, and medical expenses. Business owners can also deduct business-related expenses. Now that we've covered the different ways to reduce your taxable income, let's delve into filing and paying your taxes. Filing and paying your taxes. Most individuals must file their tax returns by April 15 each year, reporting income earned in the previous calendar year. The process can be overwhelming, especially due to the complexity of the U.S. tax code. Many people opt to hire professional tax preparers to help navigate the filing process, while others turn to tax software to file electronically. Some tax software providers offer free e-filing services for individuals whose adjusted gross income, AGI, is below a certain threshold, often $73,000. This can simplify the filing process, and in many cases, it allows taxpayers to claim their tax refund more quickly. When it comes to paying taxes, the IRS expects payment by the filing deadline. Payment options include direct deposit from your bank account or using a credit card through third-party providers. If you're unable to pay your full tax bill, you can request a payment plan from the IRS. In rare cases, the IRS may reduce or eliminate your tax debt if it finds you cannot pay due to severe financial hardship. Understanding taxes and staying on top of your filings allows you to manage your financial obligations more effectively and take advantage of opportunities like tax refunds. Disclaimer: the information provided in this video is for educational purposes only and should not be considered financial or tax advice. Always consult with a tax professional for personalized guidance. Outro. Thanks for watching. What tax topic are you most curious about and would like us to cover next? Let us know in the comments.